Okay, so this is going to be an overview of the order to cash process, which we're going to be using for our lab exercise. All right. All right, so I guess to start off with, we'll talk a little bit about a little background about the SAP systems. What is SAP? What is an ERP system? All right, so as we've talked about this before, ERP system is really a set of integrated business applications. Keyword being integrated. That are designed to carry out common business functions. So all the things we do in business, so general ledger, accounting, HR, um, and the idea is by through the functionality of the system, we're able to manage the execution operation of the organization in a coordinated fashion. All right, so some of the characteristics of an ERP system. Um, Integrated modules. So the modules all, basically are designed so that the functions can integrate with each other. Common database, common definitions, and common database. Um, so an update, if we do an update to one module, automatically we're going to update everything that is associated or connected with it. All right. And the idea of the ERP system is reflects a specific way of doing business. So part of this is of an implementation of an ERP system is aligning the way the business operates with what the capabilities of this integrated system is. All right. So the idea is that this a lot of times requires a fundamental shift from looking at things in terms of functions to looking at things in terms of value chains, which is kind of focused on the end-to-end execution um, of a process. Right? So some popular systems, the one we're working with is SAP. There's other ones out there. So they've actually been around, started in the early 1990s. So they're about maybe 30 some odd years around. SAP, is the one we're going to be working with, but there's other ones. Oracle, which is actually more probably better known as a database system, database management system, is also a supplier or developer of ERP systems in the same way. So they have a whole suite of systems they have in their portfolio. Banner is an ERP system specifically targeted for higher education. So LaSalle is using Banner as our ERP system. Workday is a little bit different. Workday is an application which is it operates actually in a cloud. So it's a software, what they call software as a service, which operates in a cloud. So there's no need to um, deploy a physical hardware inside the organization. You access it the same way you would access an application like Amazon or Google across the internet. All right. And then PeopleSoft is actually a little older um, ERP system focused on human resources that actually was acquired by Oracle a couple years back. Right. So what is SAP? So we've used this term. We've talked about SAP. So a little background on SAP. It's a German software company. It was originally founded in 1972 by four engineers who were working for IBM. They're headquartered in um, Waldorf, Germany. And what they make is they make a suite of software products, develops enterprise software systems that are designed to manage and business operations and computer relations. And it's as we say, it's just another ERP system. We have connections in the area, in the Philadelphia area, because their U.S. headquarters is located in Newtown Square. So it's a multinational organization. Uh, their global headquarters is in Germany, but the U.S. headquarters is in Newtown Square. All right, so let's talk a little bit about the sales order process. Right. So part of when we set up an ERP system, one of the big things you you need to do is create and model the structure of your organization such that You can, you have a design which represents kind of how your company is organized, like how many distribution centers or sales offices or different entities within the how your company is organized. Right? So we call so when we're looking at the order to cash process, first thing we look at is what we call the sales organization. All right, so a sales organization is responsible for negotiating sales and distributing goods and services. Right? It is the top organizational level for sales. So what you do is when you set this up, you organize from the financial perspective. So all your numbers, all your sales numbers will roll up to your sales organization. Right? And there's a overall within the SAP design, there's a company code. So everything falls under one company code, and a sales organization can only be assigned to one company code. But you can have a sales organization, or excuse me, a company code can have more than one sales organization assigned to it. So it's a one-to-many kind of relationship. The next structure down we have is something called the distribution channel. So the distribution channel is really the way the sales material reaches the customers. Right? So it can and it can be set up your flexibility so it can either go to one with one sales organization, or it can be assigned to more than one sales organization. So it'll be focused on things like, and this is some high level examples, but they're not limited to this. But company does its sales through wholesale, retail, or direct sales. Right? So obviously you could have another one like internet sales and other. Once again, that would be reflected by what is the company's business model. Right? But every organization has some form of distribution channel with which it transfers materials through to the customer. A division is really what we use to sell products, or the different product lines. All right. So one division, at least you get organization has to have at least one division. You get multiple divisions. Give you an example. When I was working with FMC, we were a chemical company, but we had three separate divisions. One sold agricultural chemicals, one sold food and pharmaceutical, and the third one sold industrial chemicals. All right, and we had three different divisions and three different sales organizations. All right. So what happens is, though, one thing that happens with the stuff, when you create the divisions will only you have there's limitations on material, so you want to make sure that you cannot, if you have things in one division, only one division can sell one type of product. Right? So if you have a product and somebody says, okay, well, I'll sell it here and I'll sell it here, it doesn't work that way. You have to have an assignment of a specific product to a specific division. Right? And then finally, we have what we call the sales area. So it's a combination, which is a combination of the sales organization, distribution channel, and division. All right? And they're all tied, and this is all tied together. All right. So this is so the reason we talk about this is when we do the SAP lab exercise, we'll see, references to things like the sales organization and the distribution channel, and the division and things like that. So it all shows up on the within the screen. And really, we just want to kind of give you a little background of what kind of how this is set up, because what happens is we don't have to configure the system. The system has already been configured, but we have to use it. And in order to use it, you're going to need to be aware of some of the ways and how the configuration has been established. All right. So the fitter snacker sales organization, all right, is what we're going to be working with. If you look at the assignment instructions, it'll explain kind of the backstory. It's we make snack, I think health snack bars or something like that. We actually have two um, two businesses. There's a wholesale business. There's a direct business. Um, from a logistical side, there's a concept of something called a shipping point. All right, so the shipping point is a location where we send stuff out of. All right, so a plant can have multiple shipping points, and a shipping point can serve multiple plants. So you could actually have, you could have a plant with shipping points on opposite sides of the plants, or multiple operations. So it could be loading dock or mailroom or whatever makes sense for the organization. So and then so that's tied back to our logistics actually as we're moving. So we'll see that as we're in the delivery processing. But this is the high level customer order cycle. All right, so there's a pre-sales activity. So there'll be some stuff assuming that like sales reps are visiting customers, or we're reaching out to them through sales programs or whatever have you. Ultimately, that will hopefully translate into a customer calling in to enter a sales order. All right. So for this it's initiated through a sales order process. So that people can either do an inquiry or get a quote, which we can then turn into a sales order. All right. Once the sales order's in, then the next piece is to actually focus on things like the logistics and material handling. So actually getting the product, identifying the product, packaging the product, shipping the product to the customer, to the delivery, creating a bill that we can forward to the customer for the products we're forwarding to them, and then to receive our payment. Right, so this is the order to cash. So as we said, this is the order to cash process, high level. So pre-sales, there's a couple different ways we can look at pre-sales, sales support, pre-sale documents. So it's what we do to really kind of direct or influence the customer to put an order in. All right. The difference between an inquiry, so there's a thing called an inquiry, and there's something we call a quote. All right. So an inquiry is really what we create when a customer is simply looking for information. How much material do you have? What's the price? What's your delivery? All right. And that's compared against a quote, which has really the same stuff, except that the specific, much more specific in terms of what the material we're gonna sell, and then what the price is. So it's a binding on our part. So it's actually, you can almost see it as a contract. All right. And both inquiries and quotes can be used as a starting point. In our case, we're going to be creating an inquiry and using the inquiry to create the order. All right. Once we have that, we have that for initial customer engagement. Sales order processing is, we place an order. The scenario is customer will place an order with the company's customer service group that will create a document with information, which we call a sales order, which has information about the customer, the materials, the pricing conditions, the scheduling lines for delivery dates and quantities, delivery information, billing information. All right, so this is really, as we say down here, it's an electronic capture of a business event, all right, which is somebody has, engaged us to send product to them in exchange for payment. Okay, so once that's in place, and that triggers the next level of processing, which is actually more around the material. So this is around our sourcing. Do we have product available? Will we take it from product on hand? Do we have to purchase it from somewhere else? Are we a make to order production? Are we sending it from an external supplier or from another plant or warehouse? So once again, this is really driven by how the organization itself is set up and how it runs its business. All right. So some places are, make to order. Some organizations are, maintain inventory. Whichever way, the organization does its business. Right. But that's from a process side. That's what's involved with this. All right. So inventory sourcing occurs whenever you create an order, you change an order, or we create a delivery document. The delivery is the next major step. So delivery activities are we create a delivery document, we transfer orders to move the material to where it needs to go. We then pack it if needed, and then ultimately we end the delivery with what we call the goods issue. The goods issue is the point where we actually transfer the goods from from our custody, our ownership, to the customer's ownership, and we generate an accounts receivable entry in our accounting systems. The billing document is the creation of the delivery, execution of delivery also triggers the billing, which is what we're going to what we expect to be paid for what we're selling. All right, so we copy information from the sales order documents, delivery documents, and then we'll automatically debit the account. So the integration. So this is an example of kind of the integration part of an ERP system where we will take information regarded to the physical transfer of material and shipping of material, and then update the financial side of things on the other, within the accounts, within our accounts receivable and the revenue accounts. And then the payment is when the customer pays us, we then will collect that payment and then apply that to the account. All right, so posting payments against invoices and then reconciling differences if necessary. Right, now, one of the things we make a point here is cycle does not always go as planned. If you go end to end with no mistakes and no complications, you can call that refer to that as a perfect order. All right, so not all orders are perfect. All right, we could not have enough material in stock. There can be defective material. There can be customers received. And what happens is organizations will have processes that are actually implemented within the ERP system to deal with that. Right? So this is kind of a high-level picture of order to cash, or pre-sales, sales order execution, inventory sourcing, delivery transportation, goods issue, billing, and then finally payment. All right. Now there's a function that's in the SAP system we call document flow. What document flow is all about is as we're going through this process, we are actually creating different documents. Right? We create an order, we create something called a sales order, which is actually a document that's in the ERP system. All right. When we create a delivery, we use that sales order to create a delivery. We create a delivery document. When we create an invoice, we create an invoice document. And what happens is each one of these will have its own unique number. All right, so we can, so the numbers are not necessarily going to connect these different documents together, but there is a function inside of the ERP system which lets us, we call document flow. So the document flow will, as we're going through it, it will track the flow of our material or the different steps. So when we create an order, we create the order, and then we have deliveries associated with it. We can have other material transfer documents, good issues, invoice, and accounting. So at any point in time, if somebody calls up and says, "What's the status of this order?" We look up the order, and we can see, okay, it's delivered, but we haven't done a post goods issue on it, or we've done a goods issue and we have an invoice outstanding. So, and this is just a picture of what the document flow looks like in the system itself. There's a concept of something we call master data. So master data is data we put into the system. It's centrally stored, and really we use it in the in these processes, so we don't have to type everything in every time we put an order in. So if you didn't have master data, if you took an order from someone, you would have to take all the data that goes into that order. You'd have to type it in yourself. So in order to streamline things, what we have is we create master data, which we draw from when we create these documents. So there's three types of master data that we're really focused on. One is the customer data, which describes the customer, who the customer is, they're sold to, shipped to, billing, all that information. Um, the material numbers, or the material master, which describes all of the material, like what do customers buy? But not just that, we also share that information with production because we use material in production. We use material for plant maintenance for spare parts. So this is a common system that's used across all of the different operating functions. And then the third set of master data that's really, really important is the pricing. And pricing becomes can be very sophisticated or complicated depending upon your business. Usually we think of going into a store and there's a price and you pay the price and you take the material. Most organizations will actually have a fairly sophisticated pricing module, because it could be also, if you're dealing with a customer, you can set pricing by volume, you can set pricing by contract, you can create things like surcharges, which are maybe temporary charges to, in case, like, for example, the price of gas goes up. Companies will create a surcharge, apply a surcharge for gas, for transportation. So there's a whole sorts of things that go into the pricing functionality. All right, so that's it. That is simply another type of master data that goes into that we use in the system. So when we create an order, what happens in the system is actually we'll take some information from the customer master. We'll take some data from the material master. We'll take data from the pricing. All right, and also we'll have other information around shipping points and routes and things like that. All of that stuff comes together to create an order. All right. So we talked a little bit about the shipping point. This is really where we get into our delivery, which is, we figure out how the material is going to get to the customer. All right. And there's a variety of different ways. There's rail, there's ship, there's truck, or combinations thereof. And a lot of times you'll see, product will go, part of the way by truck, get put on a ship, get sent to another location, get picked up and delivered by rail. Any number, so a lot of different ways, from a shipping and transport functionality. And really, this is what the shipping point kind of defines how that flows. Right. And then, we have the ability. Now, the system itself has some, I would call this kind of a rudimentary scheduling process using, backward scheduling. We can do either backward scheduling, where somebody will, you'll have a requested date, and then we'll have fixed times around transit time, loading time, pick pack stage, and then be able to create an estimated delivery time for that. And then you also have forward scheduling, which kind of looks at it in kind of a little bit of a different view. A lot of applications, a lot of organizations will use an example of, like, Amazon. They actually have very sophisticated software that they use to do their calculations, and they're not. This is a very simple kind of model. They have a much more sophisticated logistical, there's software that's specifically designed to be able to, provide a much more precise calculation of estimated delivery times. It's how they're able to get, if you order something from Amazon and it says it will show up in 2 days, it will usually show up in 2 days. A little bit about deliveries. So deliveries actually can be, simplest form of a delivery is we have a sales order and we create a delivery. However, We could do things like we can have one sales orders can break into multiple deliveries. All right. Or we can have multiple sales orders that could put on one delivery. So there's a whole bunch of different types of scenarios that can come into play. Or in our case, we're going to be very simple. We're going to say sales order to delivery. But these processes, if you look in what happens in organizations, depending upon what the organization does and how it competes, you can have all sorts of variations of how uh, we execute our supply chains. This is what we call the picking process. So this is what's happening in the actual warehouses. Ultimately, a delivery requires somebody to actually physically, assuming it's some sort of we're selling a product of going out picking up, basically going into the warehouse, physically having data stored in the warehouse, and then identified, pulled, and set up for transport and then shipping. Right, so this kind of describes what goes into that process. And then billing is a little bit like delivery. Once again, we can have all sorts of different combinations of approaches with invoicing. So we can have one delivery, we can have a one-to-one straight line sales order delivery invoice, or we could have sales order delivery, multiple invoices, or sales orders can create multiple deliveries and they will have their own invoices. Or we can create a sales order that will have, multiple deliveries, but then we would have a consolidated, a collective invoice. So say, for example, if a company buys stuff over a 30-day period and only wants to see one bill instead of getting 30 bills. So these are all sorts of different ways these processes operate in the real world. Right? And then posting payments. So one of the things to remember about posting payments, we can send companies can send one check for multiple invoices. Right? They can also send checks for less than the full amount. So short pay. So there's things to be considered around. Well, what do you do with a short pay? If something is less than the what the bill was, how do we handle that? At what point do we, is there's a lot of times what organizations will do, they'll define some sort of rule around how much leeway can be given for short pays. You know, and if it's outside of that, then what do you do? That actually creates a whole nother process uh, to be executed. Right? So all of these things we've talked about, we're going to see in our fitter snacker exercise. All right, so all these different pieces of the ERP system. It's a fairly simple, fairly simple, straightforward process, but it also is one that, kind of touches upon all these different pieces of the ERP environment. And that is the completion of our overview for the ERP order to cash process.